because I found my way. Take back my life today. It's me, I'm queen. I'm a winning woman. I'm winning every day because I found my way. Take back my life today. It's me, I'm queen. I'm a winning woman.
All right. Hello, welcome back to Within Knowledge. Now we're starting a new segment, and this segment is basically what do you do? What do you need to do before you buy your first home, or what do you need to do before you invest in any real estate? So basically it's called Welcome to the First Home Buying Process. And to start off any home buying process, for a lot of us, our first time, we definitely take the option of looking for a mortgage broker. And that's where someone like Miss Arlene Bryant comes into play. So welcome, Arlene.
Oh, thank you for having me. Thank you very much.
I love your background. It's way fancier than mine. But I'd love
my office.
I love it. I would love for you to introduce yourself to the people so they know who you are.
Hi, my name is Arlene Bryant, and I am a mortgage broker.
Nice. Thank you so much. So basically, let us know how, I know you personally that, you've been doing this a while, but let everyone know your expertise lies with lots of years of experience.
It's basically 15 years of experience with mortgages, Yeah, it's been very interesting 15 years.
So what made you, before you became a mortgage broker, you were a mortgage consultant. So what inspired you to make that transition?
Well, I really wanted to help people achieve their own personal financial goals. Mm-hmm. And one of that is a house, because I also was a financial service representative as well.
Wow.
But I branched off into mortgages because just to look at someone's face when you say you've been approved, or you could actually get a house, and you've been pre-approved, or whatever the reason concerning a house, it just makes me feel like I did something.
Yeah, you helped them.
I really enjoy that.
I love it. So basically, for those who don't know, and I just kind of bounced up on the mortgage broker definition probably about 2 years ago, because I always thought when it was my time to buy a property, buy a home, I would go to the bank. I had no idea that there were firms called mortgage brokerage firms that does such amazing things. So basically, can you just define for us, what is a mortgage broker?
Well, a mortgage broker is an intermediary person between the bank and yourself. It's a third party, a person that works very hard for you. And usually a mortgage broker works for many different institutions, not just one. So they could get you the best offers, not necessarily the lowest interest rate, but the best offers that fits your needs.
Right. That's so important, because usually if you go with a bank, your bank, sometimes you have to kind of be with the bank to get a mortgage from them. So it's only that bank. But I love the idea that you provide many options.
Very much.
We have lots of different needs. So basically, explain to us, what is the main difference between using a bank for your mortgage or using a mortgage brokerage firm for your mortgage?
Okay, so what a mortgage broker firm does, as a mortgage broker person, I work for you, not for the bank. Okay. So what happened is you have access to me all the time. You have my cell phone number, you have my email address, it's very personal service that fits your personal needs. Try to call the bank and try to speak to a mortgage specialist or a mortgage broker or a mortgage, you know what I mean?
Yeah.
Just try. You're going to get messages upon messages, and maybe they have a callback time, let's say between, we got back to within 24 to 48 hours, and you have something really important you want to let them know.
Yeah.
You won't be able to, because guess what? You're a number. With us, it's an individual, because if I don't work well for you, I don't get paid.
Wow. So it's really drive it.
Sure. Yes, I have to make sure that whatever you need, I'll get it for you. So it's personalized.
I love that. I love the personalized aspect. And I love that you provide many options to match the profile of the buyer, which sometimes a lot of us, we need different options. And I feel like that's such an important thing with a mortgage brokerage firm is that sometimes you go to the bank and when you hear that no, your whole life, your dreams is crushed. And with a mortgage brokerage firm, they might be, well, this one says no, let's try. You know, I love that.
Exactly.
There's hope. There's a continuous effort I see from mortgage brokers that I love. Okay, so now I finally step in front of your door. I'm like, hey, I really want to buy a home. The bank said no to me. Can you help me, Arlene? What are the 3 most important documents that I need? Like my file will not get looked at if I don't have these 3 things to apply for a mortgage.
Number 1, a job. You have to have a job. You have to have some source of income.
Oh my God, that made me cry.
You know,
so much.
you know, some form of income, because if you don't, guess what? You know, I really can't help you if you don't have income.
Yeah.
Okay.
Yeah.
So you know, a job is good. Sometimes retired people as well. Sometimes disability as well, as long as it's permanent disability. So there's options, not just necessarily a job, but just to branch off and you know, on income wise. Okay, that's number 1. You have to have income.
Okay.
Number 2, a credit. You need credit. Yes, the big C. You need credit. And not just you know, poor credit. You need some at least good credit. It doesn't have to be excellent, but good.
And what sort of, like, not to define on a number, but what range of credit scores would you say that's a workable credit for a person?
It is good. What they're asking for is basically 650, the minimum.
Okay, really? Wow.
Yes, they're asking for the basic, which is 650, and no late payments, you know, I mean, stuff like that, in the last year or 2. Okay. Some banks say 2 years, some banks says, you know what I mean, 12 months. So it depends. So you have to work with, because I've seen credit where there is 700 and there's collections on it, you know, so you just have to be careful. So just make sure that there's no collections on your credit score, on your credit itself. So it's important. And even if they do have, you have to take care of it, because the bank is saying, if you can't pay let's say a bill for $200 in a collection, you can't pay for a mortgage of $300,000-$400,000. No way. Pay attention to your credit very much. It's very important.
Very important. So you said number 1, have income, have a job. Number 2, have a workable credit, which is about 650. Okay, what's the third one?
Down payment. You need down payment.
Oh Lord.
Yes. You're required 5% down payment. Okay. 5%. The total value of the property. So 5% of $300,000 is $15,000.
Okay.
Required at least 5%, the minimum. You know, whether by your savings account, your TFSA, your RSPs, you know, a donation from family, from your parents, not just family, from your parents, mom, dad, brother, sister. You know, if they said, you know what, I want you to get a house and I want to donate 15,000 to 5%, here it is. So you have to have those 3 things to be able to at least start the process. Wow.
Start the process. Wow. Income is really important. Credit score is really important. And that down payment is really important. I love it.
Yes.
So if you're thinking about getting a home, make sure you have those 3 things in check. Make sure you have your savings going in check for that home. It's so important. Okay. So can you walk us through the basic process from the initial meeting to receiving a mortgage? Just like the basic process of what happens from, now I'm here with you. I've brought my 3 things until I received the call. Yeah, you got your mortgage. What does that look like?
Okay, so when I usually meet with clients, as you say, they have their 3 things. They have a job, they have their credit. Well, they have credit, good credit, or okay credit, and also they have their down payment. I collect those papers from them. Okay, initially I collect those papers from them and I send them a contract between the person and I, just to see that, guess what, I'm going to pull your credit, I'm going to work with you, I'm going to try to see how I could better serve you. Okay. So the contract stipulates all of that as well, you know. So after they send the contract, they send it back to me, then I start working on their file. I create their file, I need IDs and so on and so forth. I create their file and we start in the process. of that.
Okay.
And then I start with the numbers. So that's what I do. I start crunching the numbers, right? The numbers to make sure they make sense, you know? Also, for those that have children too, we count family allowance as well.
Wow.
From Canada and Quebec government, you know? Some banks do, some banks don't. So if there are children, I make sure, let's say I go to the bank that do count that as income. You know? So it's very important if you have that as well. So we collect all your paperwork, and then after everything seems to be okay, then I would give you a pre-approval letter.
Okay.
Then I said, okay. I always ask which bank you're with, and I'll always ask, do you want to stay at your bank? You know what I mean? Okay. And some will say, it doesn't bother me. Let's see, you know, what happened. Where sometimes some people say, maybe let's see what the best interest rate, or some people say, let's see what best suits me. You know, because your bank don't normally sometimes take your family allowance and you have children. Wow. It's not every bank that does that. Some bank is like, we're not interested.
I did not know that.
Yes. So some banks are saying, I'll take 30% of it.
Oh.
Some banks will take 50% of it. Some will just take 100%. Some financial institution, not just some banks said, I'm not taking anything, but some financial institution will take 100% of the Quebec and the Canada, and some will just take federal.
Wow.
So it depends on who you're dealing with and what to make the numbers work for you. Who do I go to? By speaking to the client, by seeing what is best for them. If the numbers are so close together, I need the Quebec and the Canada family allowance, I got to include it and go to the financial institution that do accept that for that client. So it's very good. I collect all the documents, everything is going good. We issue a pre-approval, meaning we give you an amount that with your credit, with your income, how much you qualify for.
Okay.
It's a qualification process. How much do you qualify for? So let's say this person qualify for $500,000. Okay. The $500,000, the minimum down payment, I have to get all the paper that you have a $25,000 down payment, which is 5%. Okay. I have all the proof. Then I would recommend them to my mortgage. Then I recommend them to my real estate broker.
Okay. You have
the one that. Okay. I have to work with someone. They work with me. I work with them.
Okay.
So I would call my real estate broker and said I have a client that's already pre-approved for $500,000. In that meantime, you're not allowed to go get any extra credit. Don't go get a car. Don't go do anything drastic. You know what I mean? Yeah. Because what happens if you take more than 30 days to get a house, the bank will pull your credit again. And if you do something between that time, you can get a decline, a refusal. Because I've had clients that went to get a $10,000 line of credit already pre-approved. So you just stay still. Don't do anything. Don't go to Bro Martineau or Brick and try to get furniture.
No. Oh my gosh. Don't do it.
Be careful. So just be careful, you know. So once you get your pre-approval, I send you the real estate broker. So the real estate broker, you go visit homes that you would like, you know, in your price range, 500,000 and less. Yeah. You find one, the real estate broker would ask you, would say, do you like it? Yes. You send an offer. You signed an offer. An offer is signed and it's accepted. As long as it's accepted, they send that to me. Okay. I send that after they send that to me, I put everything together. Already I've created a file. Everything is already done. So I submit that to the financial institution, with a bank or any other financial institution that whatever your needs are, it's lined up to what you would like. I send it to them. Sometimes it depends, because excellent credit will take you 2 days. Oh,
that's the goal.
That's the goal. Excellent credit will take you 2 days. Sometimes it'll take you up to 7 days.
Oh, wow. Okay. It's still not too bad.
It's not too bad. So the real estate broker would put 10 days. Why? Because then there's, if you have to get not evaluation, appraisal to be done. Okay. Not appraisal. Sorry, not evaluation, not appraisal. Inspection. You have to get an inspection within that 10 days and so on and so forth. And, you know, sometimes the banks would ask for more paperwork. So we got to get all of that, you know. So everything is done, give or take, within 10 days. Good. So I issue a final approval from the bank as well as the insurance company, because you got to go to the insurance company because you put less than 20% down. Yeah. The insurance company has the last say. Okay, because sometimes what happens is you get a pre-approval from the bank and the insurance company don't back you.
And I never
So
knew that. I never knew
Yes.
that. I thought what the bank was like, okay, here you go.
No.
But wow, that's
No.
new. Mm-hmm.
The insurance company has the final say.
Mm-hmm.
The insurance company could say no, but you got a pre-approval from the bank.
So what does the insurance company really do?
They are required by the government to cover the loan. So if you default on the loan, not paying it, they're the one that comes in and said, I'm taking over this and I'm confiscating your home and get out and I'll sell it back.
Oh, okay.
So they are the one that covers the banks to make sure that they don't get any lost.
Okay, so they're there for the bank, not for you, to see if you are a liability.
To cover the loan.
Okay, got it. Okay.
To cover the loan. So because of that, you have to pay a premium, right?
Right.
There's a premium. If you put 5% down payment, the insurance company wants 4%.
Cheese and bread.
Yes. So they add the 4% on your loan that you have at the bank, so you don't have to take it out of your pocket immediately. Anything less than 20%, you have to pay a premium. After 20%, there's no premiums to be paid.
So that is
come on,
20. Yeah. Sorry, go ahead.
Yes. So I was just gonna say 20% of the $500,000. You know what I mean? Come on. Anybody have 100,000 sitting in their bank account to have a down payment for a home? Exactly. So you need the insurance company.
Yeah.
So $25,000, get insurance, or 100,000 doesn't get you any insurance. You just the bank has a final say. So now the insurance company gives you an approval because the bank submit the loan to the insurance company after I have submitted to the bank.
Okay.
And then the insurance company comes back, approved, everything is okay. You know, sometimes they may ask for evaluation if they think the price is too high and for that area or whatever. Sometimes the bank as well as the insurance company or vice versa. Sometimes the insurance company said, oh, listen, this is too expensive for that area. Let me do an evaluation, you know, just to make sure they're not, you know, cheating you.
Okay, so if the insurance company evaluates and realizes that this house is too costly, the seller is charging too much for this house in that area, would they be able to tell the seller not to sell for that price? No.
They won't cover the loan.
Oh, they won't cover the loan. Oh, okay.
They won't cover. So,
oh, wow.
Yeah, and there's 3 insurance companies. There's 3 of them that covers loans. You have CMHC, Canada Guarantee, and Genworth. Those are the 3 companies that covers loan. Canada Guarantee and Genworth are private. CMHC is with the government.
Okay, wow. So usually you try to go to private or government? The
government is easier, but it's the same. The rules are the same.
The rules are the same. Okay.
The rules are the same. And the same amount you pay, there's not, you know, it doesn't matter if you go private or public. It's the same amount you have to pay for insurance company, but they have to approve the loan. Okay. So that 4% that I just said for the insurance company, you have to pay taxes on it for Quebec, 9% of taxes.
Quebec.
So that's have to pay at the notary, and that's cash out of your pocket. You cannot add that to the mortgage.
Oh, wait. So 9% taxes on the 4% will have to be paid upfront cash. So this is another...
At the notary.
At the notary.
Yes.
So this is another cost that sometimes as a first time we forget or don't even know.
Yes.
And you're thinking, okay, I have my 20,000 or my 15,000 down payment for the home, but you need to think about the extra costs.
Yes. So I was just giving you an example. Times it's $1,800.
$1,800
on the 4% that you pay of 20,000. Yes.
If we had a 5% down payment.
Your 5% down payment plus that $1,800. So so what happened is after everything is finalized, we send the file to the notary. Whether your choice or if you don't have any, I could also give you a notary as well.
Yeah.
You're moving, we send your file to the notary. Everything is approved now. We send your file to the notary. After it's sent to the notary will call you and say, we are setting an appointment and this is what you have to bring to the notary.
Right.
Your 5% down payment, your 9% also for your insurance company, your notary fees.
Okay.
as well as the if the person that lives at the place currently has paid city and school taxes, you got to reimburse them back.
Oh, wow.
Up to the day,
know that.
up
Wow.
to the day of when they're moving.
Oh, wow. Okay.
So the notary calculates it by day, 365 days divided by the amount up to the very day you're moving. So if you're moving, let's say now is February, if you're moving March 1st, up to the day, the person that moved will pay up to the 28th of February, you start paying March 1st.
Wow. So is there at any point that a mortgage broker or real estate agent would notify a first-time home buyer all of these fees that you need to be aware of even before getting the process in order?
The real estate broker doesn't really know much about that. I'm the one that has to tell the client.
All of the costs associated.
All the costs related to, yes.
Okay, perfect.
All the costs. So I have to tell them about all the costs. So yes, definitely.
So after all of this, then you hear welcome home. Wow, it's definitely, I see like you literally build such a great relationship with the clients because you spend a lot of time with them.
A lot, because
emotions, of course, erupt after going through so much to receive your home. You know,
Yes.
So I really, really appreciate you breaking down the entire process for us. And I definitely learned a couple of things, like for sure. And just, you had mentioned that before, I just want to touch on it because I do like to inform, myself and others about your credit score. And you had talked about a line of credit just briefly. Just wanted to reiterate that the line of credit, definitely don't go try to get one when you're trying to do a mortgage because it's a liability. I don't know why. Like I literally
if you already have it, it's okay.
Yeah.
But not use it. You know what I mean? But don't try to, don't try to get it after.
Yeah.
So everything you do, try to do it before. And some banks ask for 90-day statements, meaning if you have a down payment, they say, can I see your account for the last 90 days?
Oh, okay.
Some ask for 90 days because they want to make sure that you didn't just dump money in yesterday. You know?
Yeah, okay. You got to be telling the truth, be honest, people. Okay, I feel like we did a lot and there was so much to learn here. But just quickly, like what are two mistakes that you see like first-time home buyers? Like what are some of the mistakes that we kind of do in the mortgage shopping process?
A lot of times we just have our minimum down payment.
Okay.
So let's say the place is $500,000. The minimum down payment is $25,000. It's not enough. It's sometimes you're like, yeah, I have my down payment. You have to have, let me tell you, the bank require you to have not just the $25,000 down payment. Okay. But the bank require you to have $25,000 plus $3,250,000. Okay. $3,250 more. Okay. An extra 1.5% more. Okay. It's called closing costs. Okay. Okay. Yeah. So you have your $25,000 plus an extra $3,250. Why? Because the bank is saying, make sure you have your notary fees, make sure you know what I mean? Yes. We're just making sure. So total of 6.5%. So it's not just the minimum. The minimum is to give the bank, but the 6.5 is to show the bank. Right. So be careful. One is to show. Yes. One is to show and one is to give. Okay. So you just have to make sure that you have that as well. All in your account. And what's the other common mistake that first-time home buyers do when it? Sometimes they don't get a real estate broker. They get a place sometimes from the proprio. It's your new place. You're first time home buyer. You have no idea about buying a house, and there are a lot of faults in it. Yeah. And these people don't have to tell you the faults. Yeah. But a real estate broker can find the faults. Yeah. Because they have license as well. So I could say to you, I'm selling my house and just put it on the proprio. Because I don't want to pay a real estate broker. Right. But there's a lot of faults that's hidden that I'm not telling anyone. Yeah. You know what I mean? Some people actually try to go buy a home themselves without getting a real estate agent. Yes. And it doesn't cost you anything. So why would you want to? And then you probably have to redo the roof, termite there. And it doesn't cost you. It's the seller that pays. The seller who's selling the house that pays. So why wouldn't you want to get something that doesn't cost you anything?
Yeah.
You know what I mean?
That's two good things to identify. Don't make those mistakes. Save up 6.5% and get a real estate broker. Okay,
Yes.
So I think we talked about how large the down payment should be. Like we did that the whole time. I did want to briefly talk about a fixed rate, or I forgot what the
variable rate.
Oh, variable rate. I was like, okay,
a fixed rate or variable rate. Yeah.
A fixed rate or a variable rate. Basic definition and which one is better.
Okay, so when we're qualifying you for a mortgage, the Bank of Canada says everyone has to have qualifying rate. A qualifying rate for Canada is 4.79. It's a qualifying rate.
Okay.
So everyone, it doesn't matter which financial institution you go, you have to have a qualifying rate of 4.79.
Okay.
Okay. We have to qualify you at a higher interest rate. That's not the interest rate you're getting. It's just qualifying you at a higher interest rate.
Okay. Okay.
Okay. No one could qualify you at a lower interest rate. It's the Bank of Canada that stipulates that.
Oh, wow. Okay.
So the other thing is the fixed rate or the variable rate, the actual rate that you're going to walk away with. Okay? The first time home buyer, the first time buyers, I always say take a fixed rate. Why? Because the rate doesn't fluctuate. It stays the same for 5 years.
Yes.
And if you are on a stiff budget, this is new for you.
Yeah.
Do a fixed rate because you know for sure. Let's say it's $1,000 a month for your mortgage. You know, on the 15th, let's say it's $1,000.
Okay. Okay.
It doesn't change for the next 5 years, so you could budget.
Okay.
Okay. The variable rate, though, if interest rate goes up or down, it fluctuates, and that is if you want to take the risk.
Yeah, of it being lower.
There's a chance to be lower. There's a chance to be higher. You know what I mean? And that's what variable rate does.
Yeah.
It fluctuates. It doesn't stay the same. You know, and sometimes fluctuates. Some people, every time interest rate goes up or down.
Yeah.
It fluctuates. Some people it puts at the end of the term. Wow. So it depends. So if you like to have those things happening to you, meaning I don't know what my mortgage payment will be in the next 2 months because it's gonna fluctuate and I don't mind. Take it.
Oh my gosh.
But it's something you gotta watch all the time, and sometimes you don't watch it, and you put let's say you put $1,000 in and it's actually $1,050. Your check will bounce.
So right now, some people might see like, okay, there's a low rate, but not understanding that that may be a variable rate, and take that, and then in the next 3 years, their rate is like, that's not what I signed up for.
Exactly.
You have to ask questions, everyone. Make sure you know exactly as the definitions. And Arlene is amazing at explaining and taking her time to make you understand. Ask your mortgage broker all of these questions. So one more thing, you know what I found out, because you know I love talking about this.
Yes.
What I found out, and you just kind of mentioned it again, is that, just clarify for me if I missed something. So after 5 years, I heard that you sort of have to reapply for a mortgage? No.
You don't need to reapply after 5 years. You just renew.
Renew
Your mortgage.
Renew. Can they refuse you? No? Okay.
Unless you do not pay your payments on time.
Okay, so
that's the only way.
And could you decide to go to another bank after 5 years? Oh, okay.
Yes, because it's a term. The term is 5 years, but the amortization is 25 years.
Okay.
So when I sit with a client, I'll tell you the term is 5 years, and the you have 25 years to pay the whole thing off. But every 5 years, the term every 5 years, the interest rate changes. So in the next 5 years, you won't have 25 years left. You'll have 20 years left.
Okay.
But different interest rate.
Okay.
So you could just renew.
So is that beneficial for someone, for example, in 5 years, another bank has a better interest and et cetera, et cetera. Do they have to come back to find you, or do you call them, hey, 5 years is coming up, it's time to renew? You call. I
call between 3 to 6 months earlier before just to see, but I don't just call to ask for renewal. I said, do you have any projects?
Yeah.
Do you want to renovate? Sometimes people want to buy a car and they don't want the extra payments per month.
Oh, wow.
Because once 5 years later, your mortgage increase in value, so you have some equity.
Okay.
So instead of you paying $400 or $500 a month for a car, put it in your mortgage. It's gonna probably cost you an extra $20, $30, sometimes $100.
Ooh, Arlene.
I know. I know. I know how to do this. I know how to do this. Sometimes people change their homes too. For the first 5 years, they're like, I just took this house because I just want to be comfortable.
Yeah.
But I've outgrown this house 5 years later. I want a better house, a bigger house, a more, you know what I mean? Okay. And my family has grown. Yes. I just had a client. When she got married, no children. She had a 2-bedroom and she just took the basic. Now she calls me 5 years later and she's like, listen, because it wasn't my client before. She's like, listen, now I have a baby. I want a bigger place. She sold her house and she bought a bigger house and she paid off her debt. So she's even debt free as well. Yes. The total of that cost for her, her value of her property and everything, she paid off a whole lot of money in debts. And then she have a bigger place and she walk away. No car payment. Wow. No credit card payment, no loan payment, just a new place. And it costs her maybe $100 extra. So with all the debts that she have had, she saved over almost $2,000. So all she's paying now is the mortgage and a better, nicer house. So I always say to clients, don't try to get your dream home at the beginning. Don't. Just try to get your foot in the door into a mortgage. As long as it's comfortable. Then 5 years later, you'll be so surprised to get your dream home with the house that you currently live in. So don't try to get, that's it. Just try to be patient, because a lot of times, sometimes we want to jump ahead and, you know what I mean? And so on, but sometimes just baby steps. At least 90% of my clients do that. They just say, I just want to get a house. And once I get a house, sometimes 3 years down the line, they change it. Wow. It depends. But if you do, there are penalties to pay because you break the rules.
5 years. Wait until 5 years. Oh my God. This was amazing. I really learned a lot. I really enjoyed talking to you. And where can we find your services for a lot of people who buying a home is your goal this year? Where can we find your services to help us through that?
Well, I'm at Multipre. And, you know, you could Google Arlene Bryant and Multipre, and I will pop up on Google. Hoping I do. I check every so often. Also, my phone number, if you want a personalized service, you could call me at 514-918-8003 to call me and speak with me, you know. So,
is it okay to put we'll have all of Arlene's information in the bottom.
Definitely. You have my permission. You have my permission.
You'll be able to find her. And we thank you so much for giving us all of this for free. So definitely get information, get a real professional to help you through this next part of your life. Thank you guys so much. And bye. Thank you, Arlene.
Thank you very much for having me.
I'm winning every day because I found my way. Take back my life.